Welcome everyone to our shortened session, holiday session. A couple hours here in the U.S. before they shut everything down. Hope everyone had a great Thanksgiving, or at least a good day off. We're getting this pullback that I talked about earlier in the week after we stretched higher Monday. And right now we're about halfway back. In fact, we were. I'm going to go with, even though the weekly, when you look at the weekly, it's not a great week in the euro, down week. And as bearish as people are saying the dollar could get, and I've read quite a few, look, the dollar is up on the week, about equal to its off number. So, you know, when I look at this here, I go, yeah, can we get one more push up? 1, 2, 3 into the end of the month up here to new highs? Or was this it and we're just getting a little 1, 2, a little ABC before we break down under 96? I'm leaning with this one. You know, consider today not a bad day to maybe just put a piece on and toe in the water for next week and see how it acts Monday, Tuesday for shorts, wrong over the high. That's the same story pretty much for Aussie. Aussie has a, you know, a pretty nice pattern. This was a 3 drive, but maybe down here. And the Aussie is going to be a nice buy zone. Metals are weaker. And for those of you who are not members yet, you have to come to our website Sunday evening for our Cyber Monday special. So the whole thing, I think, pivots on what the dollar does. We had dollar strength early in the week when the market was getting hammered pretty good. So we'll see what happens here. Gold does need to clear this 1237 level for the scenario to for 1260, 1280 to happen. Let's see. I mean, compared to the euro, right? The euro retraced 50% already. The gold off this rally, and I bet it's not even 23. These aren't the correct fibs. So really gold's holding up better. Silver's still the weakness. If you recall, when Steve showed the gold silver ratio about a week ago, it had 2 drives there, which meant there's one more push up to gold outperforming the silver. Maybe it happens with silver being weaker on this break. But you look at silver right here and 1420, 1450, you break this neckline, it measures back to the lows. So gold's still acting better. If you're going to try and accumulate the metals, you got to go with gold. I'll be interested to see what it does at this pivot. 1212 was a big number here, and then once we closed above it. So let's see if gold can trade 1212 next week. Oil, I think people are pretty tired of bottom picking the oil. That's why it's probably not a bad time. You use reduced leverage here at this 52 level. But as you can see, if you look at the 4 hour, you have 1 confirmed. You have 2 diverged. And at these lows right here, you're higher, you're just a little under 30. But I'd say besides Bitcoin, one of the most hated and bearish commodities out there is oil because of what it's done. And speaking of Bitcoin, when Greg made the call for it to collapse one more time, he also said look for 4,000. And as you can see, we're starting to get some divergences developing. We will have divergences developing at 4,000. And on the big picture, Greg has this labeled as, well, let me give you the weekly. This was A, and this will complete B, and he's looking for a C. And I know it's insane to think about it, but you know, this is a pretty insane market. The C would carry it to new highs. So maybe an area to look for. I mean, I don't trade the wallet, but a friend of mine told me about this. It's like a stock. It's an investment trust on Bitcoin. And I might take a shot here sometime. And when I see 4,000 in the Bitcoin cash. So it's the symbol is GBTC. And That's about it that I see for the week. I don't think it's a great day to pile into anything. You know, chopped up week with the holidays and shortened session. And, you know, next week we're going to wrap up November. I think that more things will clarify. But I'm going to go with that was a high in the dollar and that this strength in the dollar is a fade unless Euro starts closing under 113. Starts closing under that 113, then, you know, then you could see the 112.20 level again. So still hasn't done enough wrong to declare that what happened the week before wasn't real. It has not negated it. It just held. So I'm interested in what the guys have to say, full of tryptophan. I know Blake is probably loaded up with tryptophan from the turkey. He says he's a good eater and good cleaner up. He's not a cook. So tell me, did you have the drumstick, Blake? Did you claim the drumstick?
I'm not a drumstick guy.
Right.
My kids grab each one of the drumsticks.
Oh, do they? All right. That's
Hey,
you don't
Blake.
like dark meat, huh?
Good morning, Coach. Good morning,
Hey,
Blake.
buddy.
Blake, are you using a microphone other than the microphone of your headset? Because you sound a little bit far away, mate.
It's probably because it was.
Okay. And one more thing, Coach. The Cyber Monday offer, we decided it's going to go live tomorrow morning, so people can take advantage of it. You know, Saturday, Sunday,
Oh, okay.
and Monday. Okay, just to
Okay.
clarify that. So the Cyber Monday offer, which is going to be, we can say it now, it's going to be for new members only. You know, you pay for 1 month, you get 1 month free, and that's only applicable to new clients, people that haven't tried ForexAnalytix before. Okay.
Okay, pretty clear. 50% off sale.
Yeah. For
Okay.
yeah, for monthly plans.
Yeah, that's pretty awesome. Thanks,
Yeah.
Steve.
My pleasure.
All right. Yeah. So I guess I didn't have my microphone up against my head there. So yeah, it was hopefully everybody had a great Thursday or Thanksgiving, excuse me. You know, when I woke up this morning, I immediately, noticed the euro dollar was, obviously the euro had gotten hit really hard. European PMIs really weighed on the market, but one of the things that really has my attention, even more so than the euro, but we're going to go over here to the euro in just a moment, is the S&P. The S&P is actually trading quite heavy here, and if you look at like the where the S&P is trading at, this is a very long-term trend line, and it's huge. Now this is only a shortened day, so the risk to having a shortened day is that we could have some, if the market decided it wanted to trade heavy today, it could trade heavy quickly.
What's the harmonic you have up there, buddy?
This would be, I guess, more of like a bat pattern. I kind of drew it just to draw it, but I think maybe
I'm worthless with harmonics, but I think you're right. I think this is a bat, actually.
I think that would be more of a bat, right? If it was a 38% retrace, I think it's something like that. But let's get rid of that for now. Just so it doesn't, for some of you guys might be like harmonic people.
I bought a 10 lot thinking I'd see 2,900 in an hour or so.
Well, the thing is that we are we're trading at this really key like daily trend line, and the risk is that if we break, it could get quite ugly. And so if you're out there fading the dollar, the dollar's obviously really strong this morning. If you're out there fading the dollar, you got to, the risk is that hey, if equities get heavy here, the dollar might catch a continued bid of just safe haven flows. So that's a little bit of a risk at this point. What I'd like to see with the S&P is I'd like to see us break back above this 2670. And if we break above 2670, I think that puts us in the clear for, a Christmas rally developing over the course of the next couple of weeks. It's going to be interesting to watch. So, if you're out there, you're like, oh, the euro got hit, and PMIs and yada yada yada, and it can't really trade any heavier. It can, and the euro, in my opinion, could very easily see this 113.15 level. We are at the 50% retracement right now, and we are holding up okay. But we could trade heavier, especially if the S&P starts taking out some of this support down here. And I mean, we are at risk. I have to warn you that the S&P is probably at a pretty high risk of breaching some of these support levels at this stage, because there's an old adage in the market: what does not go up usually only has one other direction to go. And in this case, the S&P is not bouncing. So if the longer it stays down here, the heavier it sits, the risk is that we're going to start pushing through some of these supports and tripping some of these stops. And if that happens, then the euro dollar could make another leg down towards 113. A lot of people have been looking at this 113 as being like a big inverted head and shoulder pattern. Let me draw that out for you. Let me make sure I got the right pen, which I don't know why this thing gives me the white pen. It's like, I don't want the white pen. Why do I want the white pen? But anyway, we could get some sort of inverted head and shoulder pattern right there. Something a little less phallic than what I drew, but the this right here, right there, that's probably the I don't know if we're going to see below this 112 level, but we could trade down to 113 and then reverse. I think that is definitely a risk at this point. So you got to keep an eye on the euro here before you decide to get excuse me, too bullish. Now, the cable got hit. There is a there's an EU vote over the weekend, right? Is that correct, Steve? Or maybe Stelios? If
Sunday, yes. Sunday.
Okay, Stelios, you sound a whole lot better today.
I'm not. I feel like, well, yeah. But hopefully I'll be better tomorrow. Yeah, I am still not very well. But anyway, so yeah, there's a vote.
You still sound a lot better than my wife.
Okay, let's not go into that then. Okay.
Elios, you never sound better than my wife. Let me just say, ever, never. But anyway, okay. So what do you?
It's because she hasn't got that sick as my wife is at the moment. You should listen to her. She's like, Mamra from Thundercats.
Wow, I don't even know what that is, but that sounds bad. Stelios, so on Sunday, could you tell us a little bit about this vote?
Sorry, let me move away from my dogs. So on Sunday, there's a summit to finalize the Brexit deal details, let's say. So there is, Theresa May is still working frantically to get to somewhere where she thinks is going to be something acceptable. But yeah, the deadline is Sunday, and then there's a vote on that. And obviously, that's not the tough part. The tough part, as we've said a million times, is the UK Parliament, which looks like is not, as it stands, there's not a way in hell it's passing.
Indeed.
So I have to say that the cable has been pretty resilient, though, despite all this, and I mean, it seems like, and I think you would agree that the market is priced in the worst case scenario, which is, perhaps this, that it's not going to make it through Parliament, and we're going to have to renegotiate Brexit again. But the pound, I'm surprised, isn't trading weaker. I'm surprised we're not trading below 127 at this point, and that I think is pretty startling to probably a lot of people at this stage. So
I think it's what you said, Blake. It's already priced in quite a bad outcome. So we need to get something worse than just a rejection from Parliament and I'm guessing to get a big move lower, because there's not a lot of people that actually expect that this can go through Parliament. I mean, we've already had plenty of members of Parliament declaring that there is no chance in hell that they're voting something similar to.
So I guess the question to me would be, well, why aren't we trading lower? And that's the question that I continue to ask myself, is like, well, if this is not going to pass, and there's not a chance in hell. Why isn't the cable trading lower? And you know, I guess it is overall weaker, but if you look at you look at the news and you know, just from an outsider looking in, you know, I have to realize, I mean, I'm like, okay, we were just at 128 a few weeks ago, you know, back here in October, and we're actually a little bit higher than where we're at, and if you go back to August, you know, we're still higher than there. So, you know, why aren't we trading? Why isn't the cable not trading down at 125 or 122? But I don't know if there's any reason to be bullish either. You know, I've tried to pick up a little bit of cable this morning, just you know, on this dip, thinking, okay, well, you know, from a risk reward perspective, I can, you know, see the reasons to be long down here, but I don't think there's any reason to really be bullish the cable unless, you know, we're trading above 129. We got to trade pretty clean, in my opinion, pretty cleanly above 129 to really be bullish at this stage. But you know, anyway, the cable is trading heavy, and you know, it's actually a little stronger than the euro right now, and which I'm surprised actually. So as far as what to do like today and what I'm planning on, whoops, I didn't want to do that. What I'm planning on doing today is I'm actually looking for the euro to actually dip towards the 618. A couple people pointed out that there's, you know, still a bull flag pattern. I'm a little bit less inclined to call this a bull flag pattern anymore, because the flag has exceeded 50%, more than 50% of the distance of the pole. So, but that doesn't mean that we can't, you know, trade down here and then up into a, you know, inverted head and shoulder pattern. I think that's still possible.
Would that have the symmetry that you look for, Blake, if we traded down to 113?
You mean for an inverted head and shoulder pattern?
Yeah.
Yeah, it would. I think it would. Yeah, it would.
Right.
It would still be symmetrical, but not from a, you know, a bull flag pattern like that looks like this. I think you'd have to trade it as an inverted head and shoulder pattern, technically.
I like that.
Yeah, I mean, you know, it's still possible. The Aussie, I'm really not doing anything with, other than, you know, I'm long Aussie New Zealand currently. Everybody should know the reasons why, and if you don't, just, you know, go take a look at the pattern in play and look at the longer term charts in the Aussie New Zealand. Know why I established a position there. But the Kiwis trading a little heavier here. You know, the Aussies still trading kind of heavy, and rightfully so. I mean, if the market is if we see some risk off, the Aussie and the Kiwi should come under some pressure. But I will also state that if for some reason, you know, the equity markets you know, catch a bid and we start here, let me grab the pen again, and if we start making our way higher and we break above like this 2670 level, then I would not want to be on the short side of the Aussie or the Kiwi, really, because both of them have held up pretty well in face of this risk off that we've seen. Now we do have some data today, and we'll go over the data live here. We have the dollar Canadian and data, or excuse me, the Canadian data. We have CPI and retail sales. Now the dollar Canadian, when we broke through this, you know, 130.3270 low, I actually shorted the dollar Canadian below here at 132. I think I shorted at 132.69. I pulled a little bit out of it, like, you know, 10 or 15 pips on the short side. I was expecting it to go down here. I just didn't want to stay short through the Thanksgiving holiday, but I was expecting us to come back down and retest the 618. I thought it would be, you know, it would take a little longer than it did. I thought we'd be trading basically at the trend line right now, and I drew this out, you know, 2 days ago. If you use ForexAnalytix, you saw it a couple of days ago. What we have done is we've come down to, you could arguably say we've come down to this trend line. So the dollar Canadian has bounced, and the Canadian dollar is weaker as crude oil continues to sell off. Look at crude. I mean, this is just an amazing. I'm more irritated at crude oil at the sell-off that we've seen in crude, and you know, gas prices in my neck of the woods have not really adjusted at this point. But we are in a really severe downtrend. You can see this in crude. Now, as crude oil sells off, you would expect that the dollar Canadian would have rallied, which it has. I mean, we've rallied off of the support. I'm surprised that the dollar Canadian is not trading above 133 right now. Now, in the event that the Canadian data comes in much stronger than expected, and just so you guys know, we are expecting stronger Canadian data. We are expecting Canadian data to come in stronger from last month's read. And I remember when we missed the CPI and retail sales last month, and you can see it was a pretty big miss. And if that data like rebounds strongly, which the market's expecting, but let's say we come in better than expected, I think the longs are at risk here. And I'm not sure. I don't have any position in the dollar Canadian, but what I'll be watching for is this trend line that comes in right here. And you can say roughly it's at 132. So in the event that we break through 132 back to the downside, then I think that there's a risk that we see a bigger breakdown. One of the things that would also make me feel better about shorting the dollar Canadian here is if equities started to bounce, which if you look at S&P futures, we're pretty close to lows. So I'd like, you know, I'm not sure if I really want to trade today. I mean, I may. I mean, as far as establishing a position, I might scalp in and out of the market a little bit here. Following the data, but I don't know if I'm willing to establish a position going into the weekend and going into next week. If I shorted the dollar Canadian because the Canadian data was stronger, the prerequisite for me to hold a dollar Canadian short. So in other words, in order for me to just, you know, get short the dollar Canadian and stay short the dollar Canadian, would have to be strong data, you know, strong Canadian data, which we'd have to see. And I obviously I want to see a bounce in crude oil from these, you know, very, very suppressed levels. I'd like to see a bounce back in crude, and I'd like to see equities bounce. And that's a big ask. I mean, you're asking a lot for this market. You look at crude oil, and crude oil is obviously just getting taken to the woodshed. I don't know if I'd necessarily want to be short down here, but you know, here we are at the 50% retracement of the 2016 lows to 2018 highs. Okay, we're at the 50% retracement right now, so it could happen. And if we bounce here in I mean, look at this divergence in relative strength. We bounce in crude, equities start to, you know, catch a bid. Maybe the dollar Canadian is a decent short here. And maybe that would be something that would allow me to stay in a position longer than just an hour or so, is to see something like that. But the data is coming out in, you know, less than 10 minutes, so we'll have to you know, keep an eye on it. The dollar Mexican peso is just kind of, you know, range bound in this little triangle here. The US dollar Norwegian krona, I mean, this thing is much stronger. You can see the difference between, like, you look at the US dollar Norwegian krona maybe reacting more to crude oil than the Canadian. So if you compare like the dollar CAD, okay, you can see how, let's see, you can see how the US dollar Norwegian krona is much stronger and breaking higher. The dollar Canadian is not participating like that, which I find a little interesting. So, but so if you're like, well, yeah, I want to short the US dollar Norwegian krona, you would have to see a significant bounce in crude oil in order to play that, in my opinion. Last but not least is the dollar yen. The dollar yen is kind of sideways here, and I honestly, and I know I've said this a lot over the course of the last couple of weeks in the week ahead videos. I really don't know what to do with the dollar Canadian or the dollar yen, and frankly, I haven't traded it. I haven't traded that or the yen pairs as of late. Now the euro yen is breaking lower today, so realize the euro yen is breaking out of a triangle and it's breaking lower. But think about it. If for some reason the equity markets bounce from, you know, you see the S&P near support, if you know, the S&P just for some reason starts to bounce, we'll get a reversal here in the euro yen. This will cause a false breakdown, which should result in a breakout higher. That would be this situation. Could happen if the S&P really started to bounce, but if the S&P starts to sell off, which I think is probably the more likely scenario, if the S&P starts to sell off, the euro yen's in some serious trouble, because we are already breaking down. We've had some pretty key rejections here in the euro yen. The euro yen's probably in some trouble. I think the more likely situation is that we're going to break lower. But again, I think the euro yen is dependent more on the S&P versus the S&P is following the euro yen. It's going to be the other way around. The euro yen is the tail, and the S&P is going to be the dog. So it's the dog wagging the tail, I guess. Did I say that correctly? I don't know. Anyway, so with all that being said, I want to pass it over to my colleagues, Steve and Stelios. Good morning, guys. How was yesterday's? How was yesterday's trade? It seemed pretty slow.
There was no trade.
There was nothing going on. Well,
almost nothing going on. Yeah.
Yeah. Definitely, all the moves came this morning after the massive Euro PMI misses, and man, it was some ugly data that came out overnight.
Oh yeah.
Yeah.
For sure.
The thing to remember with today's Euro PMIs is that it's the last PMIs before the December meeting, and the ECB is supposed to finish QE by the end of this year, and the plan so far is for them to start hiking after next summer. With Italy being Italy, and you know, the QE being finished and all that, I don't know how easy it's going to be for them to start hiking after next summer. But
you remember how earlier I said that either they hike earlier, or there is not going to be next summer hiking. Not for the ECB. In general, they will have completely missed the opportunity to build in some ammunition, because personally, I've said many times, I expect that even if we're not in a recession within the upcoming year, you know, there's going to be more than clear indications that there is going to be a slowing in growth. So I see no chance that the ECB will be actually ending up hiking like in 7-8 months from now. No chance. There's no such a thing as no chance, but you understand what I mean. A very, very low chance. We've already seen serious signs of slowing growth, both in the US and the European Union. For example, the last durable goods that we had was abysmal, and the revisions as well. And as you very well know, durable goods is a leading indicator, right? And we've seen in general the leading indicators miss lately.
All right, guys. Well, good luck today, and happy, and have a great weekend, everybody. And have a great interview, Coach. Thanks, guys.
Thank you. Hello,
okay,
Steve.
we have Canadian data in 1 minute. Hello, Dale. How are you doing?
Oh, okay, buddy. Like you know, fighting those viruses.
Yeah.
Huh?
Yeah.
It's like being the wrong way in a trade.
So we got CPI and retail sales in Canada, so that's in about 40 seconds. I wanted to talk just a little bit about oil before you start, Steve, but I'm going to wait for the data before we do that.
We have 1 minute. What about it? I mean, besides the fact that it's clobbered to death, I mean, you know, this kind of rate of depreciation, it's only comparable to what we had seen when actually the oil market got demolished from summer 14 to the first month of 2016. This rate of depreciation we've only seen back then during the past few years.
This was faster. I think.
Let's have a look at data coming out right now.
Yeah, let me switch to USD, by the way.
CPI is higher, and retail sales seems to be 0.2 versus 0.1. So data looks to be a little bit better. than expected.
Yeah, it's pushing to the low of the day. CPI 2.4 versus 2.2 year on year, so above target theoretically speaking. Yeah, and we are seeing this is the daily chart. Let's go down to the 4-hour chart. Here it is, USD CAD. So USD CAD is oscillating a little bit here. 132 obvious support. We're still trading above, and as it seems to be paring back its losses so far. There's nothing bearish with the USD CAD at the moment. I mean, regardless of what the data. So if we go back to the daily, what remains to be the case, and as you see this initial reaction lower due to stronger inflation has already been retraced. Of course, we need to give it a little bit more time, but what remains to be the case is that we've broken above this descending channel, and as long as that's the case, we did find resistance at 133, which is a level of interest, but as long as that's the case, there is no real technical reason to be looking lower. We even came down. We even had a throwback several days ago. We retested this broken channels resistance as support. So, so far so good. I mean, if you're bullish, I don't really, love the momentum, the upside momentum, but that doesn't mean that it can still keep appreciating even in this slow choppy manner, even to make it all the way up to this confluence of resistances at 136, especially if we do make it, if we do close above 133 at some point in the near future. I do think that 136 is going to be the next natural technical target for the pair. We didn't have any other data coming out, Stelio, right?
Not that I know, no. So before
okay. So let's go back to oil. Yeah.
So I just wanted to say a few things. I've said them in the past on a couple of occasions here on the webinars, but I just want to repeat some things because I think they're quite important. My personal macro bias on oil has now changed, and I'm bullish. I'm not saying it's going to go up now, but when I say macro bias, I mean 12, 24 months from now. And the thing to remember, in my opinion, is the following. Oil has had two big sell-offs before this one. Okay, one in 2008, which was due to the global financial crisis, and one in 2014, which was very different for a very different reason, and that was because U.S. shale oil producers came in. The technology was taking off, and there was a huge amount of supply coming in, and it just demolished the price. Now we have to remember this because the U.S. shale oil producers were the main reason for this tipping point before the 2014 sell-off, and the U.S. is now producing enough oil to handle all of its own demand. It's a net exporter now, and the other thing to
yes, these guys have a high break-even point, if I remember right.
Yes, I was going to get to that. Yeah,
in the 50s.
Yeah,
right?
somewhere there. I think,
I was reading about it earlier and a couple of days ago. I think the average extraction cost is around $30. Now you add taxation, transportation cost, all that, it goes to 50.
etc. Yeah, investment, and don't forget that the vast majority of those kind of projects are financed. So you also need to add to that financial costs.
Yes, they're highly leveraged, and they have much higher break-even costs than countries like Saudi Arabia. And I was reading today, actually, the U.S. shale industry has around $300 billion of debt. So they're very sensitive to price action. They can remain operational, at a loss. They've done this in the past, but really not for very long. So
for a limited period of time.
I mean, still in 2014. When crude crashed to 25, they were capping all those wells. Now in fracking, is it easier once they're capped to get them back online?
From what I mean, I'm not an oil expert, but I've read that it takes some time to to close a rig down and reopen it, and it's not
cost.
It's not from one day to the next. So I'm seeing this move here, and it's still crashing to now, right? It's 50. It's almost hitting now $50, and it doesn't make any sense, in the long run, and I mean, a year or two in the future, this move should be reversed. And, you saw Donald Trump 2 days ago, tweeting about, lower oil price. This is great for America. Yes, it is true that a high oil price puts the brakes on well, any country's economy really, but he has to also remember that the US is a net exporter now, and they also produce their own oil for their own consumption. You know, a low oil price is going to really kill US shale producers. So
yeah, but you have to remember who the average voter of Donald Trump is, right?
Oh, yeah, let's not go into that. Okay, but yeah,
because it's not the it's not the rich family, right? It's the low maximum to mid-income consumer. Not all of them, I mean, but the majority, let's say. In which case, the net benefit is much greater. So I have to say that I don't disagree with that with Trump. I mean, there is a bigger chunk of the population that benefits from that than actually loses out. I have to agree with that.
Well, I'm looking at it as, for the US as a whole. And, I don't see I really don't see I don't think the US is going to do well with oil, crashing, basically.
What do you guys think about this? I mean, Trump has given them a pass over the Khashoggi killing. And so we're trying to keep that relationship alive with Saudi Arabia. If something happens and it goes south, the relationship, wouldn't Saudi Arabia, who has production costs of $10 a barrel, want to just crush our fracking industry? And that's kind of what they did a few years ago.
Yes, although you have to keep in mind that it's possible they can do it, but keep in mind that Saudi Arabia, oppositely than, for example, what Dubai has done or what the Norwegians have done, instead of taking advantage their competitive advantage and the fact that they have by far the highest ability of producing crude and the lowest price of doing so, they have not been prudent and they have not made a fund or they have not taken precautions.
They haven't diversified their economy enough.
For a rainy day, exactly. Exactly. So keep in mind that they would also get hurt, right? Yeah. I'm not saying that they don't have the ability to do it or that they cannot afford it for a limited period of time. Yes, they can. But it wouldn't be the best for their economy as well.
Yeah, currency wars, oil wars, all kinds of wars.
Yeah, but definitely, this kind of a move lower is extremely strong in nature. I mean, you would expect that no matter what kind of a rebound we have, this is not going to be over. Speaking of which, we are entering quite an interesting horizontal support resistance area, as Blake showed. We just also surpassed the 50% fib. So, I'm getting close to making another attempt of being long. I mean, I made some money in the previous one, but it was, enough only for a few days. This looks like another very, very big day lower. We've already surpassed 5%. We're almost at 5.5% lower on the day. And this rate of depreciation, at least in the short term, should prove to be unsustainable. Of course, it can go lower, but nothing moves in a straight line. And so far, we have been more or less moving in a straight line. I mean, so I made money being short crude. To be honest, I thought that was a great trade. I could have never imagined, that after such a move higher, that there would be so much more downside. I mean, imagine if I had stayed short. Of course, I'm not going through the usual if that or if whatever. I had a perfectly good reason to believe that the move lower back then was corrective, so I acted as I should have acted. But I also have a perfectly good reason to believe that there is going to be a rebound rather soon, because this is completely unsustainable. And as Stelios said, by the way, if we want to speak mathematically, usually prices of things can be what is described in mathematics a normal distribution. Normal distribution, also known as a bell curve. In commodities, you do not have a bell curve. And why is that? Stelios just mentioned it before. Because you have a minimum cost of production. That is the reason why the price of commodities tend, instead of being a normal distribution, to have a fat tail on the right-hand side. So, for example, you have an extra tail on the right-hand side of the market, which means that there are times and opportunities to see very, very high prices, but it's almost impossible to get up, to get down for at least more than a very, very short period of time and have an equal fat tail on the left-hand side, because nobody wants to produce down here. You understand what I mean?
Yeah.
So, the closer we get to that side of the curve, as Stelios mentioned, the higher the risk-reward ratio is to see another move towards the right-hand side. Because, as I said, this is not a normal distribution, because you have a minimum cost of production below which nobody's willing to supply the market.
So, Steve, the crude is a buy when the blood's on the streets type of buy, right? Wouldn't you
In a
say?
sense.
Wouldn't you say that the conditions are even more intense in crypto about buying blood on the streets down here? I mean, don't you think they've? I mean, who's still long?
Well, the thing with crypto is you can't burn it to fuel, to drive your car.
Exactly.
I know. That's why I have a hard time, wanting to get involved with it. But
yeah, I have two things to answer to that. One is, coincidentally, yesterday night when I was in my bed, I had a look at my Twitter stream before I fell asleep, and I saw one of the most recent tweets from McAfee. He's the guy that has said, like,
I interviewed Crazy John.
Really? Oh, yeah.
Yeah.
He has said that, but
that running for president from the libertarians at that time.
Yeah, if Bitcoin is not at 1 million by the end of 2020, he's going to eat his penis. That's what he has said.
Yeah.
So there was he tweeted something like, this is the time to be buying, or something like that. I don't remember, because I focused more on the answers. And out of curiosity, I wanted to see what people were answering to him. He said something like, this is not the time to be selling. This is the time, to be, to be buying. And I know that it's tough for somebody to be keeping their cool head, when the price is, so much under pressure. But this is the time that you actually have to prevail over your psychology, etc.
Well,
so I was having a look at the answers, and it's something I've also seen in other conversations. And you realize that there is a huge the Bitcoin, besides the fact what Stelios mentioned, which is it's not a commodity, it doesn't have intrinsic value. Crude has extremely high intrinsic value. We use it every single day in every single country for several various reasons, right? So even if crude went down to zero for some reason, which it wouldn't happen, but you would have what to do with it, right? Obviously, from Bitcoin. So I was looking at the answers, and there is, cryptocurrency holding is like a cult. So all of them were answering back to them, like 9 out of 10 answers were like, yeah, for sure, we're headed to the sky, and let the idiots sell now because they're going to be losing on the fortunes that are coming, in the near future, etc., etc. So I was really amazed by the fact that the average investor in anything else is, would definitely be scared and terrified. So you would expect to see capitulation and fear.
And
but
they're not.
It seems, they're not. They're not. Yeah. They're not really worried at all from the fact that it has gone from 20,000 to 4,000. They're not worried at all that every single cryptocurrency that was out there during the past year has lost a lot more on average than 80% of its value, and Bitcoin has been roughly there at the moment, 80% of the value. They're not worried at all that comparing all the previous historical bubbles that we ever had, Bitcoin seems to be dwarfing all of them. So they're not worried about at all. They're still.
That's interesting.
They're
devotees. You're right. It's like a cult.
Yeah, it's like almost everybody is willing to go down with the ship. The problem is the following. As you understand, the people that were not initially lured into it, or the people that were not very lately lured into it, and they've already blown out their accounts, just by seeing the price action, they're not willing to go in. So the question is, okay, how can we assume that the price of Bitcoin or any other cryptocurrency is going to go soaring again when if you're not already participating, obviously somebody that has not participated by seeing this type of price action is not going to be jumping on board, and those that are going to be a minority, right? You need a lot of new buyers to push through the previous levels, and I don't see where.
So I think a lot that people have on their mind is like, where you might be in some type of bottoming phase, whether there's one more wash in the metals and the shares. But, if it comes down to what you want to build a position in bottom picking something for a major turn, you're better off going with commodity that China and Russia, that everyone's stockpiling instead of what they're not even involved in.
Absolutely.
Like crypto. Okay. All
Absolutely.
right. I'm waiting for the metals.
And I'm not saying that.
I was just tempted. I'm good. I was just tempted.
I'm not saying that Bitcoin or the other cryptocurrencies can't bounce.
Right.
I'm just doubting very much that any bounce is actually going to, signify that we've actually found a bottom. And okay, that was another 80% correction, because as you know very well, Coach, for Bitcoin, for example, to correct 80% lower when it was trading, let's say, at $100, and very few people were involved, it's much easier, and then rebound back. It's much easier than when it's trading at 20,000. You've got now a huge latecomers getting involved, getting blown out.
Can't afford $4,000 for one coin.
Yeah, of course, somebody can say you can buy fractions of it, and you can, but you know how it is. It feels much better, even from a psychological perspective. It feels much better saying, okay, I have a little bit of money on the side that I can actually invest and assume that I've lost them. And let's say I can put $2,000 in an account and buy 20 Bitcoins. Back then I'm in. Then saying, I have $2,000. Let me buy half a Bitcoin. You know what I mean?
Yeah.
Hoping that it's going to go from 4,000 up to 20,000.
Right. Okay.
So
what are you thinking here in the metals, Steve? I mean, silver really has given up the ghost here today. I mean, I caught a little bit of the break by being short early in the week, but I didn't do anything else at 1450 the other day.
I don't remember if I said it yesterday or the day before yesterday or both days, but silver looks to me as a descending triangle so far.
Yeah.
So, the chances are a descending triangle can break in either direction, but statistically speaking, it has a much higher possibility of breaking in the direction of the previous move, which in this case is lower. So as long as I'm not seeing a daily close above 1480, which would turn me around, in what sense? Because a daily close above 1480 not only would constitute a break above the descending triangle, but it would also trigger a double bottom formation in this case.
Yeah. How about gold?
Yeah.
Gold looks a little better. Yeah.
Yeah. So this is the scenario for silver. The interpretation that it might end up breaking lower, much more likely than the opposite. And having to do with gold, yes, it has been behaving better, but is the move higher we've seen anything more than what anybody would characterize as a textbook corrective move? Nah, I don't think so. So, I think that eventually the chances are that gold is going to break below this ascending channel, perhaps concurrently or almost concurrently as silver is going to be breaking below, or perhaps silver is going to be leading below the descending channel. Now, you spoke about the gold-silver ratio, and that does indeed point to a possibility, as you see, of another push higher.
Another flush in silver and gold holds up okay. And then it changes.
Yeah. As you see, if we look at the long-term chart, right?
Yeah.
So this is like amazing confluence of resistances up there. It's channel resistance, potential huge wedges resistance. I bet that if we feed this corrective move lower, It might even end up being like a 168.8. Let's have a look at it out of curiosity. Extensions, let's see. Yeah, 141.4. So, I mean, I would like to see something like that. And as you see, already 2 drive here, right?
Yeah.
So this.
So what would you do up there? What action? Just buy silver because it should begin to outperform gold, or what kind of trading action would that require, or to take advantage of it?
You build this. If you see a reversal up there, you build a synthetic position, which is that you sell gold against the dollar and you buy silver against the dollar, equal amount of of dollars or euros or whatever you pay, right?
Okay.
So in essence, you build a synthetic trade, being long silver against gold, and this way you don't even have to care about what's going to happen with the dollar, because now you're actually trading one metal against the other through a synthetic trade.
If you had physical metal, would you sell a few gold coins and convert them into silver?
I do have physical. I do. I've told you.
Would you sell some gold and buy silver at that point?
No? And no, for one reason only, because I CBA. I mean, I don't want to go through that process.
Okay.
What I might be doing is making sure that if I see a reversal, is that I'm going to add some. The more we go closer to the next recession, I might add some silver as well in the physical holdings, because I have no physical holdings of silver. I only have gold.
Okay. And your address again?
I don't keep them at my house, so
Oh, okay.
Don't worry about it.
Were you gonna have me over for a few days? So you don't mind if I bring my metal?
Absolutely. We have an extra bedroom. You're more than welcome.
Dale, trust me, I've been to his house. I've searched a lot. He doesn't have it.
All right, you saved me some time, bro. All right. So I don't see Jamie Marks here. Jamie, if you're here, will you ask a question? I know you're asking for the link. You're a guest in 5 minutes if you're going to be here. I woke up at 4 a.m. just to talk to you, buddy. I'm laying a little guilt on you. I don't think you're here. I don't see him.
Why don't you write to him on Twitter so we can?
I did on Twitter.
I can see him on the attendees list.
You can see him on the. Oh, so he's here then. I'm here. Yeah, he just wrote. Yeah, he's here.
Okay, because I wrote in his name. Oh, he's muted. Okay, and it's under. Oh, I see, because I spelled Jamie wrong. Thank you, Jamie. Okay, cool. All right, go ahead, Steve.
Okay. So let's have a look at a few more things. By the way, I see more or less the same pattern that I see with silver. I see with the pound. It's more of a symmetrical triangle in this case, but still it looks like more likely to me that it's going to end up breaking to the downside. So I have to say that. And euro is still holding the 114.50. I will only get in the short term bullish if I do see a daily close above this conference resistances at 114.50. What makes me a little bit more positive with euro is the fact that USD Swiss looks like it's bear flagging after a breakdown from a wedge. So just by looking at the USD Swiss, it gives me a better prospect for Euro USD, knowing that they have a rather high inverse correlation with each other. Now, let me also show the indices. DAX, as I said yesterday, you weren't here, Coach. Not only it broke below this triangle, but it came up, it retested it, seems to be getting rejected. So DAX looks good for the next move lower. 10,800 is the next level of support. The FTSE looks like it's failing once again. if it does break below 6,850, if it closes below it, I will be looking for 6,630 as the next area of support, which I think, is very likely of happening. Nikkei, after that rejection, also looks good for another move to the downside. Now, if the question is if I would trust that the USD yen would follow in that move and break below this trend line, I would say that it's likely, but why would you want to trade the yen? The yen seems to be under performing the reaction of anything that is correlated with it, right? So I think that there are better opportunities out there, but it still looks heavy to me, and it looks like to me that I would still say that if I had to do something with the USD yen, which the good thing is that I don't have to do anything with it. I mean, I can just monitor it. I would rather choose to be short than long, because it looks like to me that if it finally gets unstuck, it's going to be because it's going to push the downside. Bulls have had their opportunity of actually helping it accelerate higher, but so far I haven't seen much of a result in that effort. Let me also pinpoint here that USD NOK banging on the door of this 860 level, as it has now broken above this descending corrective formations, long-term formations resistance. So this looks, especially if we close the week like that, which looks very likely, looks like a big bullish development for the currency. While USD SEK seems to be consolidating, I was hoping for another move lower, which might come, but the longer we stay here, the likelier the chance that we're going to see another push to the upside. So let's see what's going to happen with the USD SEK. I doubt it that USD NOK can actually push much higher, and USD SEK completely diverging to what USD NOK is going to be doing. So one has to give, and we're going to see what it is. Now, having to do with the Canadian, what I'm mostly paying attention to, especially given the fact that the USD yen is testing support at the moment, and given the fact that the USD CAD has broken to the upside, is I'm monitoring this ascending channel, because this looks like a corrective move to me that's already complete. And I'm going to have a confirmation if we do get a breach of the previous low, because at the same time, that's going to confirm a break below this ascending channel, in which case I think that there's going to be a decent more of a downside for the pair. So I think CAD yen a potential short trade on a break of this 860 level. Let's see if we have any questions. Yeah, Jamie, I know you're muted. We're going to unmute you in a couple of minutes. I just saw your message. Let me see what didn't I go. By the way, from what I see, crude is getting clobbered even more. I mean, it's at the lows of the day currently, minus 5.6% on the day. Yeah, which is like the second day of such a magnitude. Actually, look at this. We've had 3 days of that kind of a magnitude within 1, 2, 3, 4, 5, 6, 7, 8, 9. So every 3 trading days during the past 9 trading days, we've had moves of more than 5% lower in crude. I mean, this is amazing price action. It's really astonishing how it the rate in which it's depreciating. I mean, it's really almost unprecedented. I mean, we have to go back to the previous move lower that it had. Keep in mind also, as you see, this is a confluence of supports that we're currently testing, because it's the support. By the way, out of curiosity, let me see. There is, yeah, here it is. Trend angle. Yeah, I want to see this out of curiosity. I want to see the angle. 72 degrees angle of this descending channel. So you can see how aggressive this descending channel has been, and despite how aggressive the angle of depreciation is, we're still managing to hit this channel support after so many days lower. So keep an eye open here, because as you see, this is the confluence of this horizontal support area and the descending channel support. I think also, given the fact, let's see how long the previous 2 days have been. So in this day, we actually moved lower 6.1% to the close. In this day, we moved lower to the close almost 7%, and we're now at so we might have roughly 1% more left. I mean, if we are to have equality with the other 2 days to the downside. So obviously selling right here right now makes absolutely no sense, right? Okay. Yep. So two things to mention before you start your interview. First of all, don't forget our sponsors, Forest Park FX. If you visit ForexAnalytix under the reimbursement plan, if you're looking to change broker, or if you're looking what the ideal broker might be for you, Forest Park FX is the people you should be contacting. Trent and Justin, they can guide you through completely pro bono. I mean, just to talk to you and give you advice. And if you decide to use them as your introductory broker, you can even subsidize your ForexAnalytix subscription or get cashbacks if you are located in the US. And also don't forget that starting tomorrow morning, the Cyber Monday offer is going to be available only for 3 days, Saturday, Sunday, and Monday. You get 1 month, you buy 1 month and you get the next month being for free. That's going to be available to new subscribers. So thank you very much.
all the good trades you could make in a 60-day period. We don't take that into consideration.
Indeed.
Price it, right? So it's really a deal. Anyway, go ahead.
Enjoy the interview. Enjoy the interview and have a lovely weekend, Coach.
Okay, guys. All right, team. All right, Jamie. Looking forward to meeting you, my trading warrior brother. I'm going to pass you the controls and make you the presenter so we could hear your voice and see your screen. Maybe you're going to want to show your website, etc. Welcome to Faith, Jamie Marks.
Good morning.
Nice to meet you, Jamie. How are you?
Likewise. I'm well.
Good.
Well fed. This morning.
Are you here in the U.S.?
No, I am not in the U.S. today.
Oh, okay. All right. So, huh?
Go ahead. We're based in Miami, Florida, however.
Oh, okay. All right. So, where are you in like a Caribbean tax haven right now?
Cayman Islands.
All right. Yeah, that's one of them. All right. So great to meet you. You're living my dream. So tell me, before you ended up being able to trade from the Caymans in Miami, how you got into the business in the first place. How did it happen for you, Jamie?
Well, my dad was a stockbroker, so I was exposed to the industry for some time. Actually, I got hooked mostly on the commodity side first. You kind of rebel against your dad in certain ways, but I would walk into his office, and there was finally one guy who finally came to the office. He was hired, and he set up this outrageous presentation. He had so many screens. He was barking out signals. He had assistants, and he was getting all the glory, and he only had like 10 clients. And my dad said, he's a commodity guy. He's the only one here that has a license. I said, I want to be that guy. And that kind of got me hooked on the commodity side. So I received the Series 3 first before the Series 7.
Okay.
And the industry has grown exponentially since the early 80s when I first entered the business and watched the growth in the managed account futures industry.
Okay.
But by primarily trading precious metals, energy futures, stock indices, the financials, very little in the ag, very little in the livestock area as far as futures. But that was really my first inkling into the business. Always liked the futures side of it, and based in Miami, we were able to come across a lot of South American producers of coffee. Some sugar and used coffee. Became hedging.
So you're handling hedging accounts. You're hedging.
Yes,
for
we
people.
were.
Okay.
at the beginning, yes. And then when I got really involved in the energy side, we were hedging gasoline futures for Alamo Rent-A-Car, Hertz, and so forth. And this really started me modeling technical analysis and modeling algorithmic trading models for these various liquid markets. That's really the start of the whole thing.
All right, so you use algos. You're kind of on your autopilot. It's non-discretionary, right?
That's correct.
Non-prop.
We think it has to be this way in the speed in technology today's society. It's just so fast. You can't do this manually. It's just hard.
I'm interested. Do you have to spend a lot of money to come up with a good algo, or how do you go about it? Do you need to have coders, as full-time employees, always trying to fine-tune things to put on automatic pilot? And my follow-up question would be, most of us were, kind of like prop discretionary traders. How did you learn? And the biggest hurdle is letting go and letting a robot EA or something else take over. How were you able to do that? I still can't.
Absolutely. Well, first and foremost, it's the emotional magnet. And being great creatures of habit, we hardly want to delve into something new, even in the trading platform. It's just something we don't like to deviate from. But I noticed that on good days, and I consider myself a good trader, so I can't even imagine a bad trader. But on a good day, I would say, okay, the gold, it's had a good day. $8, $9 is a pretty good day in gold.
Right.
But the algorithm would not see that, and the algorithm would say $14, $16, and I'd be scalping, and I'd be out with $8, $9, and I would see this
to me all the time.
All the time. So then you're saying, okay, so you know what? There has to be a mechanism that takes everything you want to do and incorporates it into rules and rule-based trading, and it's just cold, and it just triggers and pulls these triggers. And when you have a system that is okay, you don't really see it. But when you have something that's very good, you really see it. You see it quickly. So what you need is just a lot more samples or repetitions of the move, and then you can start quantifying, and you can start honing in on what's really working for you. What works for many people works. What should I say differently? Some things we look through different eyes. I look through a different lens than most traders and advisors and brokers and investors. Most people are focused on price level. So if it's crude oil trading out $51, it's a huge move today. It's 6% move. That's just unheard of in commodities. It's big, huge moves. This a 2%, 3% move in a leveraged product like crude oil or gold is a huge move. So to say 6% is an understatement.
Especially after so big of a move that the price is cheaper and they still get these magnitude moves.
Yes.
That's the amazing.
Those are echoes. So anyway, we're all focused on price. $51 a barrel, $1,200 an ounce, $4,500 in Bitcoin. It's price. And most people, investors, traders, that's what they're focused on, price. From once in a while, you'll see a model that has some volume studies, and they'll use volume and little price. But very few or hardly anybody focuses on the time element, hence the name clockwork. And when we come in, we look at the market in two dimensions, not only price, but we put a little emphasis on the time. And when we get price and squared with time, you see the market and it jumps at you, and the signals are clearer and stronger, and it keeps you out of a lot of false trades.
Sounds like you automated some GAN stuff, JB.
I automated some GAN stuff along with some seasonal studies. Everything has a seasonal cycle. It's more prevalent in commodities. You can see it in gasoline, the summer demand starting in late Memorial Day, late May, and into Labor Day, September, because that's the pattern in the United States. Gasoline is the carbon we use, and it's going to be for a while. So anyway, we see that there is a repetitive market cycle that pretty much every year we see the same things in some of these same markets, and now we have the computers to be able to go and test a lot of markets. And a lot of years back, which we couldn't do that in as little as 5-6 years ago. So that being said, we're now looking at the market in a time analysis or an axis, and we see that these markets move in certain dates. So let's just say that we have portfolios now created around this time analysis and algorithm that we've created, and it seems to be working pretty well for us. As long as we have this 12 months and 30 days in calendar, we're going to do okay, we think. So we've been able to have our software top rated by the Futures Truth magazine, and been there for now 4 years consecutive, back to back. And we think it's because of the formula that we look at the time elements. So
what kind of trading do you do with this algo? Day trade, swing, position?
All of it. We have algorithms that trade short-term day trades, mean reversion that are always in the market, that's always in some type of trade during the day. But most of the money around here is divided mostly at 67-33 split, where 67 is a longer term or intermediate term trading, and only 33% is day trade, 1 day trade scenarios.
Okay, what instruments do you position trade? Is it FX? Is it commodities? Is it equities? Or is it everything?
Well, it's everything. Mostly it's futures, Forex. I am into the crypto, but only Bitcoin. A lot of the ETFs like the GLD and the SPY, OIL. But anything that has liquidity and volatility is a good candidate for the algorithms that we employ and the time mechanisms. So
let me ask you this. It's been a rough and tumble year in a lot of different asset classes. We're approaching December now. Do your algos give you any kind of outlooks as to what they're looking for going into 2019 that could set up to be terrific position trades?
I'm sorry, I lost you as I was.
Okay, I was wondering, since you use these algos for long-term position trades and we're near the end of the year, if your algos are spitting out anything that looks like they could be terrific position trades going into 2019.
Sure. Well, let's take it step by step, because I move week by week. I have a calendar. I have my own calendar, let's say, and I can kind of look on the horizon, see what's coming up as far as trades. So let's look at something like the S&P or let me go to the NASDAQ. Here we're going into a NASDAQ model that has given us a buy signal, and this buy signal, based on time, will probably carry us on to or about the 6th, 7th of December. So it's not a long-term trade, but the bias of the window is more important. So I want to say that we have a short-term bias that between, let's just say today, or yesterday, long the S&P, long the NASDAQ, long the Dow Jones, and pretty much going to be holding that position into about the first week in December. We feel we have a tendency to move up, and pretty strong in that little window. Now, between the 7th and the 20th, we'll probably cool off a little, and then back in hard at 20th into Christmas. This seems to be the pattern, has seemed to be the pattern over many, many, many years. Whether it holds this year, we think it will, but not etched in stone.
Okay. So what's your business model at the Clockwork Group?
The business model, originally, it was to market high-end algorithms, trading algorithms, to other seed commodity trading advisors and other investment advisors that would look to supplement their current trading style. Because the style is based on time, it could complement, let's just say, an investment manager who has systems or methodologies that he's net long, let's just say S&P, and we're showing them a window where you should be short. Something like that is what we've been doing. However, recently, and we've been able to catch some very nice technical moves in the Bitcoin arena, and it's shifted us our our business model to be moving into Bitcoin futures that are now or have been trading for the last year on the Chicago Mercantile Exchange and the Chicago Board of Trade, being one of the first Bitcoin trading advisors, registered commodity futures Trading Commission and the National Futures Association as a commodity pool operator, commodity trading advisor. So we think that we're going to attract like qualified eligible participant QEP type accounts in this new space, only space that let's just say that it's been given some regulators and some framework that we were lacking in Bitcoin in the last 10 years. And now it finally has a vision of a real product. The NASDAQ is also bringing on a Bitcoin product. There's a Bitcoin ETF that was approved in Switzerland yesterday. So we think we're making some more inroads as far as the stability of Bitcoin. What I like and what I see from a business standpoint is, hey, there's over $360 billion in the managed futures arena. Very few of it, of that money, percentage of that money is in the Bitcoin space right now. They're testing the waters. So the big groups like California Teachers or IBM or a corporate treasurer at Microsoft that wants to test the water, he's given the authority already to trade Bitcoin. He's not going to wire transfer over to Bitstamp or Kraken or Polynex, one of these lower platforms or lesser known exchanges. He's going to go to the CME or the CBOT, which is the world's largest derivatives exchange. It's been around since the 1800s, have the regulatory framework in place. So we think that this space, most people are net long Bitcoin, and there's no bona fide hedging vehicle. So this is what we're attempting to do, is to bring a real hedging vehicle, trading the futures product as a vehicle to hedge the individual who's net long Bitcoin cash.
Okay. You have any view on Bitcoin near 4,000?
Yes, I am probing this area right in here. We actually got very aggressively on the short side when it broke 6140, which was our previous support level. We had a target down at 4,500. We got to 4,500. We went below 4,500. I'm watching it now. There's no buy, like a technical buy that I would see on my charts. Like if I put up a BTC USD, it's not a technical buy. It could be a risk reward scenario where, yeah, from that standpoint, it looks attractive. Somewhere here, 42, 4,300 for a move to 7,800, 8,200 with very little risk on the downside. This is more in line with what I think we're going to see in Bitcoin. So I think the timing bodes well. Let me see here. See, we've been in Bitcoin. Let me see. I don't know if you can see this. We've been in a Bitcoin sell. This has been sell here as well. None of this is going to give me a short-term buy anytime soon. However, what I am going to see is a risk-reward setup, or I'd like to see a 3-to-1, 4-to-1 if that's established. And I think it's very, very close where I can see, okay, stops would have to be below 3850. The closer we get to 4,000 would be the trigger point. Probably 4,100, 4,190, what we were looking at last time. Somewhere down in here, I'm going to take the risk to the upside.
Okay, Jamie, any way a retail trader could follow your work, and would it be beneficial for a retail trader to have your input from your algos?
We are generating a platform in the near future, probably the next 45 days, where we're going to have several algorithms almost on a menu driven, or they're going to be able to select the asset class and mix and match, almost like a portfolio manager looking to create his own mini hedge fund. So we have 5 sectors that we look at: agriculture, the currencies, energy, the financial indices, and an interest rate instrument. And we think that we attack one from each group. So for instance, in the precious metals, we look at platinum. In the stock indices would be the S&P. In the agriculture area, what they would say would be coffee. In the currency, we're looking at the British pound. And what am I missing? The energy is Kelly B, which is the top-rated system for gasoline futures. So we have that 5, and we put those 5 systems together. The equity curve is through the roof, and the drawdowns are greatly minimized. So
all right, what is your max? I'm glad you brought it up, because when I used to raise money for CTAs, everyone looks at the period of greatest returns. I'd like to know what's the period of greatest drawdowns for you.
The drawdowns have been limited to approximately 14 to 19%.
That's pretty good.
Yeah, and the upside has been just huge. So this is what we've been priding ourselves on, is that we know we have one of the lowest drawdowns in the industry as far as systems. With the same on the upside, it's a huge number. So we have portfolio that will show something like 1.1 million versus negative 19,000, and those are risk reward ratios you can definitely deal with, but only when you have the discipline to follow a system. And I think that more and more banks, insurance companies, pensions, and thrift institutions are replacing bodies with algorithms for many reasons, but mostly it's a cost-effective, and it has performance reports of some of these individuals that are younger and have not seen the boom and bust cycles. So I think this is the way we're going, and hopefully we'll continue to be leading force.
Well, Jamie, it was really interesting talking to you about automated trading, and I could tell you come from the other side, so you're a convert, and that tells me something. I'm hearing more and more of these stories, so you're right, it is a trend, and you don't have to have $1 million to set up banks of computers like people visualize. I forget where they keep them all, in Manhattan or in New Jersey, where all these
low latency, yes, correct.
Yeah, high frequency traders spend a lot of money to be able to pick up fractions or decimal points in the market. You're saying you could do it without that type of investment, correct?
Correct. Yes, it's changing. Listen, when you and I first got in the industry, a Quotrek was a very, very expensive instrument. It gave you all you want to know. Okay, and we used to share a Quotron between 4 guys on a swivel, and it was only 3 lines, and it was no color, there was no graphics. There was nothing like you have now, and some of this stuff is available free. You can get a Ninja Trader platform for free, and it has every bell and whistle you could probably want. So the technology is definitely.
I got it. Yeah, you go all the way back to how about the phone that weighed about 25 pounds?
Yeah.
That you put up to your ear. Remember that phone? Motorola or whatever? Yeah, the brick.
It was a Motorola. Good memory. Yeah.
Okay, well, listen, Jamie, really, I had a good time talking to you. It's edifying. And I think that even if you're a discretionary trader, you could add elements to it and maybe go through a process without just, going from one.
All have access to the same data, and it's public domain. It's open, it's a high, it's a low, it's a close, it's a volume, it's open interest, it's applicable. It's how we massage this data to arrive at a valid buy or sell point. So this is the art, and we have a lot of guys in some beautiful suites in Boston, a staff, and 25 guys doing algos research, and we have another guy working out of his garage in West Texas, and he's coming up with similar buy signals. That the huge group is how we don't know, but we know that the computer has made it all possible, and it's just
it leveled the playing field.
Yes, it did.
Yeah, the great equalizer. The Unabomber talked about that. Just kidding. But I'd like to wish you and your family a great holiday season. Jamie, I hope pips rain down on you, and really sounds like you're set up for the future, whatever that may be. And congratulations on that. Keep in touch with me. Like it or not, you're my newest trading warrior brother. Jamie Marks, everybody. Check him out on Twitter at the Clockwork Group, and your website is also named clockworkgroup.com.
.net and .co, and it's at Clockwork Alerts on Twitter.
Okay, got you, buddy.
Okay.
Thank you so much for your time
Have a
today,
great day.
Jamie.
Enjoy your
All right,
holidays. Be well. Bye-bye.
Good hunting. All right, that's it. I'll see everyone Monday. Good hunting. Remember, don't just count your pips, count your blessings. See everyone on Monday. Good hunting. And remember, don't just count your pips, count your blessings. You're welcome, Marius and Joshua. And see everyone Monday. Adios.